my top 6 tax strategies that you can use in your independent pharmacy. Number 1, accelerate your expenses. It means you're going to prepay expenses in the current year so you can take a deduction now versus in the year that they actually belong in. For instance, rent. Let's say your rent is $5,000 a month. Well, in December, you can decide to pay your January and February rent. So now you're paying $15,000 in December versus just $5,000, and you just picked up an extra $10,000 in deductions. So number 2 is depreciation. So you can accelerate your depreciation expenses by 1, taking advantage of things such as leasehold improvements. Usually pharmacies put a lot of money into improving their pharmacy, be it from design alterations or signage on the outside. You can usually take advantage of those depreciation costs and deduct them in year 1 or in the year you actually place them in service. Another way to take advantage of depreciation is through your software expense. Normally, software costs are tens of thousands of dollars in a pharmacy. So if you're able to deduct that all in the first year, you can also accelerate some of those costs as well. So number 3 is hiring children or grandparents. Depending how you organize as a pharmacy, you usually can save on self-employment taxes by hiring someone that is in your family. So how does that work? Well, you want to make sure you give them a real job and pay them a real salary, or else it won't pass the sniff test with the IRS. And you want to pay them a reasonable amount. So you can't hire your children and pay them $30,000 and all they're doing is taking out trash. It has to make sense for the job that they're actually going to do in the pharmacy. So, and you can hire them as young as 5, 6, because again, the job should be comparable to what they're actually going to do. So taking out trash, shredding documents, rearranging items in the store, those are all things that children can reasonably do, and you can pay them a small salary to do that. So one of the benefits of hiring your children also is that any salary that they earn, it can all be stashed away into a retirement account for them. So they can start building their retirement early because they're earning money to do so. Number 4 is you want to start putting money away for retirement. So there are a number of different retirement accounts that you can have your business invest in for you and your employees. One of the most common ones is the SEP. So that is entirely funded by the business, but there are caveats to doing that because there are criteria that if you meet and your employees meet, then you'll have to also stash cash away for them for retirement as well. So that may not be the best strategy for you because again, you want your employees to have skin in the game when it comes to their retirement account. So you may want to look at a 401k plan or some other retirement vehicle that allows them to contribute and you provide an employer match as well. Because again, you'll get a deduction for contributing to your employee's retirement plan. And also to yours as the pharmacy owner, because again, if you're working all these years as a pharmacist and you don't have anything tucked away for retirement, then you're kind of screwed. So number 5 is QBI. So a lot of small businesses don't want to be profitable for tax purposes, which is not always the right answer. So the Tax Cut and Jobs Act that was implemented about 2017 introduced something called a QBI, which is a qualified business deduction. Basically, it means as long as you're profitable, you could qualify for a 20% deduction based on that profit. So let's say you had a $100,000 profit in your pharmacy. Well, QBI deduction for that $100,000 would be $20,000. So you get a deduction for $20,000 just for being profitable. And there is a caveat to that. Specified service businesses do have a limit based on what the owners or the taxpayers' taxable income is. So you want to make sure that you're working with a tax professional so that you do qualify for the whole deduction or not. Unfortunately, pharmacies are considered specified service-based businesses, so that limit does come into play for pharmacies. So, number 6, which is probably the most beneficial tax strategy you can make, is you want to do an entity optimization analysis for your pharmacy. So what does that mean? So let's say you set up your pharmacy as a LLC, and now you need to determine if it makes sense to be an S corp, to be taxed like a partnership, or taxed like a C Corp. Unfortunately, a lot of small businesses hear through the grapevine on TikTok, on YouTube, and Facebook that they need to be an S Corp. And that's the wrong answer. Everyone does not need to be an S Corp. Sometimes you are okay being the entity that you are, but in order to make that determination, you need to run analysis. We don't change your status until we see the numbers, because it may make sense to stay a single member LLC, or it may make sense to elect S Corp status, or it may make sense to be a C Corp. So again, run the numbers and then determine what saves you the most in taxes. Because again, we're looking at how you're saving based on your entity selection.